Hang Seng barely up 0.1%.
And any new market we will enter basis the size of the price or strategic consideration.
The Nifty itself, it ended slightly above the 20-day moving average, which actually is now at about 19,393.
India is a market that looks extremely attractive on a structural basis.
Where Biocon will be divesting 2 non-core branded formulation India business units to Eris Life.
The mid-cap index is having a better showing, so the broader markets are looking pretty good.
Interest in India clearly is at an all-time high. I've never seen this before, and clearly at the expense of China.
We do expect a huge amount of improvement that you would see in the Odisha discounts going forward.
We're seeing the festive season, so we're expecting good things for the malls, which we're seeing in terms of footfalls as well.
Credit offtake will continue at the similar pace as what we have seen in the past.
What is started in 80s, from 15-16% 10-year to zero, I think that one phase in pendulum is done.
Big story really is the fact that we have got our act right when it comes to products and the like.
These times, you have to look at this week by week and be prepared for anything.
New set of rules have been framed to clear visas for Chinese nationals associated with several PLI schemes.
Broad markets continue to do really well, so 4% higher on the mid-cap index.
Well, that was the day so far. It's a quieter day on the downside a little bit, though. 50 points down on the Nifty is what we have. We are coming to you from the CNBC-TV18 Motorola Studios. It's closing bell, last hour of action coming up. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good afternoon.
Good afternoon, Prashant. Good afternoon, Nigel. And I guess it's been a little quiet, right? I think markets just trailing earnings or wherever there's news flow. Otherwise, I repeat myself from yesterday. I think people are in Diwali mood, Prashant.
I think it looks like, and we were saying this in the morning, that it'll be a good thing if the market actually pulls back a little bit. A day, 2 days worth of consolidation finds its footing. And then because the rally has been from the lows, the bounce has been sharp as well. So no two ways about it. We're at about 19,400. Supports actually come in only at about 19,300 or so. Banks, actually, it's interesting. Bank Nifty is doing a little better as compared to what the Nifty is doing. I mean, Nifty is down a quarter, Bank Nifty is up a 0.25% or so. And let's just look at the strongest index of the lot, small cap index. That's not doing very much. It's down about 0.05%. A quick look at what the mid cap index is doing. I think there is about a 0.25% gain there. So it's kind of neither here nor there kind of day. Market breadth is flipped though. 1,300 stocks are lower and about 1,000 stocks are higher. So that is the broader market picture. But enough and more to go around, enough and more to discuss in terms of what's going on, earnings, and of course otherwise. Apollo Hospitals numbers, for example, coming through at the bottom of the screen.
Absolutely, and like what we've seen, not comparing, but it's kind of the same narrative, what we've been saying about so many FMCG companies, that it's really operational performance that's keeping the market fairly happy, if not exuberant. That seems to be the case with Apollo as well. On the top line, there was a little bit of a miss, okay, now I think we have the adjusted revenue figure that's coming in. So top line seems to be in line. EBITDA and margins are looking pretty good for Apollo. Stock is at the high point of the day. What else has worked in the market? Well, you've got M&M approaching its numbers in style. We'll get to know more on that tomorrow. 3.5% makes it the biggest Nifty winner today. Coal India, again, numbers due, so 1.5% up on that one as well. Today's been a good day, actually, not just M&M. For autos in general, it's been a pretty decent session. Hero Motor would be case in point. Tata Motors is up and about. Maruti, Bajaj Auto. So in general, autos are seeing buying. And so is Pharma. There's some follow-through coming in. Not as much as yesterday, but there's a little bit of green here and there. Divi, Sun Pharma, Dr. Reddy's. All these stocks are managing some green for the day. You have consumers, which are actually trailing. So stocks like HUL, Tata Consumer, these are some of the names on the downside. And then there's, of course, Reliance, not quite in festive spirit, at least as of now. So on these heavyweights, I think keeping a lid on the excitement on the Nifty at least, Nigel.
Well, that's right. But those Apollo Hospital numbers actually look very, very good. As we speak, the net profit number that first hit the screen that appears as a bit of an adjustment. I'm looking at the operational performance. The revenue number is looking very, very good. The EBITDA number as well is looking better than expected. Remember, Apollo Hospitals is not a stock that is cheap. But the beat coming in there, and the street likes that, on the EBITDA itself, it's a 5% beat. And that explains why the stock has moved to the high point of the day. Ekta will join us to give us a quick analysis on those set of numbers. The question is, how do you position yourself at the final hour of trade, given that we have expiry on the Nifty that will play out? Mitesh Thakkar joins us to tell us exactly that. Hi, Mitesh. How do you read today's trading action, first of all, and also give us a couple of picks?
Afternoon, Nigel. So I think, this still looks like a market which is consolidating. I think 19,450 as a pivot is acting out very nicely. This is what I thought, will happen. And while the Bank Nifty was positive, it failed to clear and get past the 43,840.50 zone. We got a high of around 43,875 or thereabouts, but failed to sustain above that. So I think this is still a market which is, while positively biased, but I think, it's just trying to find feet at higher levels, given the fact that last 4 or 5 days have seen the markets gain some amount of traction on the upside. So I think that rally will settle down. As long as the Nifty remains above this level of 19,320.50 zone, I think I should be all okay. And around those levels, I would even want to take long positions and then, see how it goes from there. And similarly on the Bank Nifty, I think closer to 43,450, an area to explore long positions. On the stock side as well, we are trading with some long bias. Asian Paints, after that crude cool-off, had a good rally for last 3-4 days. It's coming down a bit. I think this pullback is a fresh entry opportunity. So try to buy it around levels of 30.80. Keep a stop below levels of around 30.40, and 31.50, 31.70 is the target zone. And the other one is Oro Pharma, and Pharma is not performing. Aurobindo Pharma has made a fresh swing high, fresh all-time high as well. So that's a buy with a stop at about 939 for targets of 975.
Okay. Mitesh, thanks very much for that. And we'll keep coming back to you for more. But let's actually invite Amit Mahavar, who's with us. He's analyst and he tracks the consumer durable space at UBS Securities. Amit, great to have you with us here. And of course, Amit joins us from the sidelines of the UBS conference, which is underway. Great to speak with you, Amit, once again, in a different role, different organization. So let's just divide this, right? Let's talk about consumer durables, and you also have coverage on industrial names. Consumer durables really is an area where perhaps there has been a fair bit of pessimism. I mean, even within consumer durables, you've got to differentiate the white good companies or the other ones that you have coverage on. So just talk to us a little bit about where valuations are. What stocks do you cover, and what's the view overall that you have?
Hi, thanks. Good afternoon, Prashant. Thanks for having me on the show. So I think on the domestic consumer durable space, in general, apologies, I cannot, as a policy, comment on stock specific, but we do have active coverage on segments like cables and wire, the entire large appliances and small domestic appliances category. Right from the post-COVID period where you had a very strong pent-up demand, you've seen some softening of demand. You look at the B2C categories, they are underperforming on growth and profitability vis-a-vis the B2B categories, which is more triggered by the infrastructure focus, be it LTHT cables or wires or the new home improvement. So there is a divergence in performance across these two segments. Inflation has been impacting the entry-level consumer, where India is the largest. The category in India is mainly on value segment and first-time buyer, and that is struggling. And not only electricals and consumer durable, you look at across discretionary, that is the trend, Prashant. On valuations, lastly, I think generally, you've seen some correction in some categories, but in general, the valuations are continuing to be at premium to benchmark Nifty, which has been the case for the last 15-20 years.
Okay, no, so you like B2C or you like B2B? I mean, you like the Voltas, the AC maker, or you like the pipe maker? Or, I mean, or the wire maker? I mean, what is the... We're not talking about stocks, but is there an opportunity to make money from here? You think they're fairly valued, both sides?
I think generally, if you look at the cable and wire switchgear categories, which are more channel-led B2B infra, home improvement or infrastructure spend proxies, there the growth rate has been better than what it was in last couple of decades, right? And particularly last 2-3 years. So we like that category. I think that will continue for the current decade. The way government is focusing on infrastructure, you have urban infrastructure trends which are going to continue, driving growth for whether it's underground cable or branded house wires. I think these are categories which will, at least next 2-3 years, I do not see any slowdown in these categories. And on the appliances side, room AC is a category which is still growing in double digits, right, as a sector. You have players which are growing higher than the industry. So there's a consolidation which is going on. You have a supply chain shift from China where half a dozen companies are expanding capacities in India, in the room AC category. That category should do well in general. In the transitory period, you have some overcapacity because demand will take some time to catch up. So yeah, maybe around 1 to 2 years, B2B categories will do better than pure B2C. And eventually, you look at the penetration levels across, whether it's fans or whether it's small appliances or large appliances, the penetration is going to be the story for the country, right? So the consuming middle class is upgrading, it's expanding. So that should eventually catch up in the long run.
Okay, got that. So that's the take on consumer durables. Amit, hi. I believe you also cover a whole lot of industrials, in stocks like L&T, I think ABB, Siemens, they're part of your coverage. So I want to ask you what you have made of the kind of earnings that these companies have delivered. I think, if my memory serves me right, I think L&T was great. Cummins was a strong set of numbers as well. Most have been good. But the question is, are these numbers good enough given the run-up in stock prices? Would you be confident, say, advising someone to take fresh positions in this industrial space despite the run-up, looking at the earnings?
Hi, afternoon, Survi. So I think on the industrial space, there are a couple of trends which are reflecting in numbers. If you see the last 1 to 2 years of performance, the urban infrastructure in domestic market is triggering very strong order intake growth in categories like electrification, whether it's low voltage or the transmission range. You have mobility, which is by far the strongest growth, right? India as a country has awarded $15 billion USD worth of mobility contracts in last 12 months alone, perhaps the largest globally. And in the thematic note we came out with earlier in the year, we highlighted the macro industrial trends on the urban infrastructure, which is driving the ordering momentum and capex momentum from the government side. And defense is the third layer, where I think defense manufacturing as a subset is becoming very large. Right, you already had significant imports which are coming down. Right, you have significant exports which are now perking up. So the ecosystem in the defense manufacturing is clearly expanding. So you have electrification, defense manufacturing, and the third layer is industrial automation because of industrial efficiency. And mind you, I'm not talking about the greenfield capex. I don't see that. We don't see greenfield capex too much inside, but the debottlenecking efficiency and brownfield capex on industrial. So these three layers are triggering very strong order intake growth on the long cycle orders. And that's reflecting in the last 8-10 quarters of order intake momentum, which is in high double digits.
Okay, so Amit, just a quick follow-up. And just in terms of, most of these companies have very healthy order books, L&T included. But just in terms of better execution, pulling better margins from this order book, what kind of companies are you most optimistic on?
Sure, very valid question. I think if you look at the short cycle businesses, which are more like technology-led product companies, right? Without going into the specific companies, you look at the industrial pumps, motors, and drive companies. You look at standby genset companies. So these are segments where you saw very strong margin trajectory in last 2 years. But the long cycle order book driven companies, again, right, which have a longer lead time, are taking much more time to reflect profitability. The execution has started in the last couple of quarters. And it's always the case. You have order intake momentum, then you have execution, right, which is followed by profit recognition. So I think in the coming few years, you will see profit growth in the long cycle businesses catching up.
Okay, all right, got that. Amit, good chatting with you today. Thank you very much for joining in and giving us a perspective on both of those sectors. I wish you season's greetings. Hope you have a happy Diwali, and we look forward to catching up with you in the coming months ahead. Okay, that's a conversation on industrials and on consumer durables. Let's just go back to Apollo Hospitals for a bit. The stocks, actually, it's put on more momentum and weight after those numbers flashed by. Now we're looking at a gain of 3.5%. So let's get in Ekta. Ekta, so what's the fine print? What has worked for Apollo?
Well, we're waiting by for the details, but overall it's a steady set of numbers because it's double-digit growth in terms of revenue, which is up around 14%. There's no real surprise in terms of the margins, which have come in with the EBITDA growing around 11% on a year-on-year basis, and the margins coming in at around 12.9%, so closer to 13%. The street was anticipating around 12.6%. Remember that the margins for Apollo hospitals have been under pressure simply because of the kind of stress that they've seen in Apollo 24/7. So this would probably assuage a little bit of concerns because it is closer towards that 13% mark. Overall, in terms of the profitability, that's grown around 14% to 233 odd crores, but that is below our expectations of around 293 odd crores. Overall, it is probably the revenue growth which has come in better than expectations, as well as the margins, which is enthusing the street at this point in time.
Got that. That's Apollo. Before we let you go, Ekta, since you're with us, I know you had that conversation with Mr. Umang Vora on Cipla. I am very sure you asked that big question, the elephant in the room, what is happening? Are promoters selling or not? What were some of the highlights that you picked up? And then we'll play out the bites as well, of course.
Well, it was extremely interesting because, Mr. Umang Vora has from the beginning mentioned that the company is different from the promoters. But what I picked up is that as of now, Cipla can probably go on and do what it's doing. It's business as usual as we speak. Their capex has not been deterred. They still have their capex going on. They are very bullish on the India growth. And Mr. Vora said that he basically recounted conversations that he's had with Dr. Hamid. And Dr. Hamid has said that, there is the most important thing for him when it comes to Cipla is that the ethos of the company should continue. The kind of legacy that they built should continue. So it's not really the ownership that matters as much as the preservation of the ethos, which is also as much as the management's responsibility going forward. So that was one of the big takeaways that I got, that, they have also opened the window for employees when it comes to trading. So maybe there is a possibility that it is business as usual at this point in time. And, one of the other points of conversation with Mr. Vora as well as Dr. Hamid has been that how other companies such as Tata Sons, Asian Paints have continued over periods and generations of promoters, and there has never been really a promoter change which has taken place there. So those are a couple of things that I did pick up. The ethos of Cipla is much more important, much more valuable to Dr. Hamid.
Whatever we do is public. The companies maintain that this is a speculative speculative sort of information that's around in the marketplace. The company doesn't comment on it. The promoters have not commented on it. We respond to what we do as a company through various statutory, announcements, etc. There has been none, right? As of 2 days back, we also opened the window for our employees. So I think people could infer, right, that things are, based on all of this, that, it seems like it's business in Cipla. I don't think we're not part, it doesn't seem like we're part of any transaction, otherwise we wouldn't have opened the window. I think it's difficult for me to, try to unravel the depths of Dr. Hamid's experience, mind, thinking at this point in time. I can only tell you what I pick up from him. I think he's most concerned about Cipla, right? And it doesn't matter to him, at least the way I've understood, about ownership. He just wants the ethos of Cipla to continue. Dr. Hamid's thing about Swadeshi, about the Robin Hood, essentially came out of his ability to bring drugs that were cheaper in the market in India. And so when the patent regime came into India and we began partnering with pharma companies, the pharma companies that I would go to present Cipla would ask me, why would we partner with you? You guys have always tried to bust our patents, right? And at that point in time, I said, look, Dr. Hamid's view has always been to ensure that drugs are available at affordable prices for Indians, right? I'd like to believe that Cipla arrives when it's required to. Right, so it arrived to fight the patent regime. It arrived to create, a partnership of sorts with MNCs. It's arrived during COVID. It's arrived during AIDS. Right, so we take a human problem and we try and solve around it.
Okay, the legacy built by Dr. Hamid, the story of Cipla. I'm sure you want to catch more, and you can do that at 5:30 p.m. today. That's when the entire conversation plays out. That's a special offering, Medicine Box.
Welcome back. Well, the market's a little bit under pressure as we speak. But let's focus on a couple of numbers then. Ramco Cements, that one came out with a set of numbers, and in fact, it looked quite good. There's a big beat on the top line itself. Now, close to around 250 crores beat on the top line. Why was that? Because volumes were much better. Now, we were working with volumes of close to around 4 million tons odd. The volume number has come in around 4.6 million tons odd. So that's one of the key reasons for the beat. And the beat on the top line has further percolated down into an EBITDA as well as the margin beat. The profit number as well looked quite good. Now, the key reasons for the beat was, one was in terms of volumes. Volumes look very, very good. The second factor is the power and fuel cost. It's down sharply both on a year-on-year as well as on a sequential basis. Remember, they've changed their mix a little bit. They're using one of their captive units as well internally. So that's helped them out there. And the blended fuel cost has come down drastically on a year-on-year basis. In fact, on a year-on-year basis, the effective cost per ton is down by nearly around $50 per ton. So that's clearly played out there. The profit number, well, yes, that's up sharply on a year-on-year basis. That's because the other income did support. But you need to note that the net debt number is close to around 5,000 crores odd because of the expansions that have come on stream. And that explains why the finance cost as well has ballooned out. Short point, though, that these numbers look good. The key reason for the beat on Ramco Cements is because of their volumes, better than expected volumes. And the second factor is the power and fuel costs, which have played out much lower on a year-on-year and a sequential basis.
Okay, well, Nigel, thanks very much for that. That's Ramco in focus for you. The market, by the way, is down 60 points. So I think it's taken from the time that we started, maybe lost another 20 points or so. And we're just under the 19,400 level, 19,388. PFC is the other one. Well, it was trading in the morning. I think it's higher right now. Good set of second quarter numbers. Abhishek is here with a quick earnings fine print. Abhishek, over to you.
Well, PFC reported their Q2 FY24 numbers, and sequentially it was a strong quarter for them. Look at the disbursements that grew by more than 90% YOY and about close to 44% sequentially. So the disbursal to AUM ratio that improved to about 52.2% versus 43.2% in the previous quarter, and that aided the AUM growth as well. So the AUM growth was about 19.3% YOY and about 4% quarter on quarter. Asset quality continued to improve. Gross NPA has declined on a sequential basis. The H1 FY24 spreads were at 2.51% and the net interest margin for H1 was about 3.37%. So calculation shows that on a sequential basis, they might have improved their net interest margin anywhere between 7 to 8 basis points. And that was down about 3.1% YOY, but it improved by 6.5% sequentially. Other income was robust and that aided the operating profit growth. So operating profit growth was 22.5% YOY and about 27.6% on a sequential basis, and that helped the PAT as well, given the fact that there was provision right back this quarter around. So PAT was up 28.3% YOY and about 28% sequentially. So strong earnings momentum and improvement in asset quality is what has excited the investors in PFC today.
Okay, well, Abhishek, thank you very much for that. Good speaking with you, and good getting those details on PFC. Sanjay Parekh is with us, founder and CIO of Sohum Asset Managers. Sanjay, great to have you with us here. Thank you very much for your time.
Hi.
Hi. Good to speak with you again. I just want to start with the one sector which everyone is kind of bullish on, and actually somebody messaged me out of the blue this morning, or maybe late night, saying that I am sick and tired of hearing that financials is the best place to be. He said it's coming out of my ears, not on television. I mean, he's on in the equity side, and it is true, right? It is the consensus overweight, and why not? I mean, valuations, etc., are not cheap, but they're cheaper relative to many other sectors, and it's 30% of the nifty weight. Right. What's holding it back, or do you think this is just a routine period of underperformance, sideways action, and it's a matter of time before the space starts to fire up?
Yeah, Prashant, I mean, absolutely valid. So I just tell you our perspective. I mean, I've run the banking fund in Nippon earlier, and prior to that, even in ICICI, I looked at the sector for 20 years. So structurally, we all know that, the banking balance sheet is linked to corporate balance sheet, household balance sheet in a way, and also government balance sheet. And then, of course, RBI is also very important. Central bank is very important. And all of it is supportive to the banking sector. The asset quality piece, is at an all-time best level in the last 12, 13 years. The valuation, now that we have a clean book, the profits do matter. And if you look at price earning, it's 10 to 12 times the best of the banks. If you look at price to book also, they're very, very reasonable. And then you have leadership, established leadership, franchise, as I said, growth. NIMs were a little bit under pressure, but the growth has taken care of it. So overall, will they grow at 15-20% in the next 3 years? Looks very, very reasonable. So I genuinely believe that, the largest PSU bank at today we are looking at on FY25 is at 0.85 times. Or the largest private banks going through a merger is at 12.5 times X of subsidiaries next year. So this, apart from COVID or 2008, for at least the private sector bank, I have never seen this sort of valuation. So when the lead large weights of the bank Nifty are available at such reasonable valuation, and then it's best to preempt a while. It takes a little bit of pain, and then the outperformance, it's not going to be linear. And you've seen that earlier, Prashant, Coal India or NTPC 2 years back was almost like a laggard and would not be fall in the radar of a lot of people. But you see the returns that has happened in the next 2 years. And I genuinely believe that the sector could be the same, where last 1 year has been weak, but the next 2 years, I think, will be really, really good for the financials.
All right. Hi, Sanjay. Thanks so much for joining and looking good in your Diwali attire as well. We'll catch up with you tomorrow in terms of the attire. But where do we find the next Coal India and NTPC? You've given us a hint with regard to the banking names. The largest private sector bank that's going to the merger, that will be HDFC Bank. And on the public sector side, the largest bank, obviously SBI. But X of the banks, where do we find the next Coal India NTPC? It was a consensus, avoid. And suddenly out of nowhere, it became a contra big hit. Your take?
Yeah, no. So, Nigel, a little bit on our strategy because it's relevant. So we not fixated that we are going to be hardcore growth investors or hardcore value investors. We are simple growth at reasonable price. And we're not fixated on this is quality, this is not quality. And, we are simply saying even a government company, which is reasonably fine, there are certain risks, but if they are the price value gap is larger and directionally things are better, we will look at it. So we had earlier Coal India, which we discussed, and that worked. NTPC also worked, though we couldn't buy in our portfolio. And now when I see today, we bought two names, which is HPCL and BPCL. And it is a contra, and that's why you need to have a calibrated weight. Now, what we are, we saw the numbers, and the first half itself, they've done 90 rupees earnings. Based on the current price of crude, it can only get better, but it will not be, as much as 90. It could be around 120 if you had to pay the current prices of crude at $70, $80 crude. Now, we all know that there is a regulatory risk. FY23 was not good, and they had to bear the losses, which is a painful thing, and that is where the worry is. But what is priced in today, even if we take very reasonable, not even this year's numbers, we take $2.5 rupees of net margins, we take $5 of GRMs for HPCL and $7 for BPCL, and the volume growth that they're going to get in the next 2 years, the benefits of the volume growth and the product upgradations, and the marketing expansion advantage. When you look at them, they are going to be making 23 to 25,000 crore EBITDA. Now, you can't have HPCL at 40,000 crores market cap, which can potentially already has made 12,000 crore profit and could make 16,000 crore profit. And they are almost available at EV EBITDA of 2.5, 3 times. On steady state numbers, not these extra advantages gains that we had. So I think there is a case to be contra that looking at ahead in May, would this government again look at it with some stability in terms of the regime, and once that is through, on a base numbers also can they make significant returns? It's not for 15-20%. We're looking at significant returns. We've already invested earlier, and we genuinely believe there's a case to look at both of them, because the whole expansion they're doing now is not too much towards refinery. There is 20%, but the rest of it is towards marketing, EV, the whole of infrastructure on the marketing side, which will all benefit. So we believe there's a clear case of undervaluation, overly worrying on both the earnings and the PE side. And we believe both can get better and can be a big upside in the next 2 years. Having said that, it is risk on, if crude goes to 100, 110, obviously it's worrisome. We know the risk, and that's why you take the, calibrated bet.
Sure. So calculated risks, that's what it's all about in the market, I guess. By the way, a lot of wobble on the Ashok Leyland price. Let's just pull up the intraday chart, because first when the numbers flash, Top line is lower than expectations by about 200 odd crores, but the operating performance seems to be in place. Margins are kind of, along expected lines, and profit figure also slightly shy of the poll. So let's see where the stock stabilizes. It was suddenly down over 2%. Now it's trying to recover some ground. Sanjay, hi. Since we're on the subject, I just wanted to get your take on autos because it's been a very divergent year for stocks. I mean, some names like Bajaj have done really well. Two-wheeler guys like Maruti and M&M, they performed well. But for Eicher, it's been a year of, dealing with heightened competition. Do you like this space at all? Would you play it, either auto or, the entire ancillary chain?
Yeah, so we are overweight on autos, and we've just added Eicher just for the disclosure purpose, and we have held Mahindra and Maruti for long. And of course, we have in the ancillary space, Samad and Motherson. So just on the, there are concerns that after the festive demand, there could be a lull for 1 or 2 months. But structurally, we believe that, they are really good long-term plays. We've been holding on this for, Eicher we've just added, but the rest of them, we've been holding it for now 1.5 years. As we believe that there could be a pause for a while because there could be a slack demand in November and December. But we genuinely believe that, there's a clear structural story, in the four-wheeler space as well. And in case of Eicher, of course, the worry is extensive competition in the segment they are. And we believe that there will be some market share, they lose some market share in their category from 90 to maybe 75%. But very, very clearly, they were right to win, both in the domestic and export market. And they would have a host of products even to counter competition. So, and I think the whole category could also expand. So we do like it. And as I said, it's again one of the contra which has not been doing well for the last 1 year, but potentially can do well. And it's also corrected on valuation. So that's the rationale. So overall, we like the space. We have an overweight on auto ancillaries.
All right. Sanjay, we'll leave it there. Great conversation as always. Thank you very much. And, I couldn't, the camera is a little far away, so I couldn't make out what you were wearing. But this is indeed festive attire. And as Nigel said, we'll catch up with you, tomorrow. Tomorrow onwards, I should say, all the way into Diwali. Thank you very much for joining us. And happy Diwali, in case we don't see you.
Happy Diwali to all of you and viewers. Thank you very much.
Thank you very much. Well, we'll take a very quick commercial break here. 50 odd points lower on the Nifty, 19,395. We'll come back we'll have some interesting news. MC Pro's Diwali portfolio that was launched last year has seen a 29.9% return, 30% return compared to the 15% that the Nifty is seen, or the near 18% with the Nifty 500. So after a splendid summer gone by, you can dive into Diwali with Money Control Pro's top picks for Samvat 2080. Fresh off last year's success, our experts handpicked these stocks. Explore on moneycontrol.com.
Welcome back. Well, the markets are down close to around 50 points. So no worries, actually, after the kind of rally that we've seen. Some bit of a pullback would be par for the course. And maybe some part of that is because of today's expiry-related factor. But a good time to turn our attention to D-Street chatter. Nimesh joins us to tell us what is he picking up. Well, Nimesh, you told us yesterday the FIs could almost turn buyers. That was almost the case. What do you pick up in terms of flows today?
Well, Nigel, today it's actually a lackluster day in terms of flows as well. Not much activity from the institutional side. And I guess, again, Nifty is facing this resistance at 19,450 on the upside. So that's playing out. I guess, it's very selective in today's trade. There are select pockets which continues to outperform. The broader markets has done well. And within broader markets today, there is a big focus in the small power stocks. A lot of, small power stocks are buzzing around huge volumes as well. So looks like there's a bit of activity there. In terms of overall sectors, I guess selective buying in the PSUs continues, so that trend continues. And today, for a change, you've seen a bit of action in the real estate names as well. But as I said, the volumes are on the higher side, the participation is lower, and again, a bit of lackluster as well. So I guess, next week there are a couple of important events, including the MSCI to track. But largely the earnings and MSCI is something to track for next week. But as I said, not much of activity in today's trade.
It's getting a little quiet out there. But stocks, anything specific that's on your radar, Nimesh?
Well, so the first stock on my list today is RateGain. That stock is marginally under pressure today. In fact, this week the stock is down 5%. And I understand the company is close to raising funds via QIP soon. So that is something to track. But remember, this stock is up 130% Y2D. So it's been a big mover, but largely under pressure because of the QIP, which is likely soon. The second stock is IndusInd Bank. Within the private bank names, this is one stock which has relatively outperformed this week. Even in today's trade, the volumes are higher. I guess a bit of preemptive buying ahead of the MSCI inclusion, and hence a big move there. So that's the second one. The third stock is Aegis Logistics. A sharp move in today's trade, good volumes as well. There was a small block, and I understand the FI was a seller. It's a clean-out trade from a long-only fund. So after that clean-out trade, a big move in that stock in today's trade. So Aegis is buzzing on back of that. And the last one is Swan Energy. This was part of my chat a few days back as well. There was a 3% block, two weeks back. Again, I understand there's going to be a large block deal soon, and maybe some domestic mutual funds are likely to participate on the buy side. So that's keeping the stock exciting.
All right, interesting list as always, Nimesh. Thanks very much for that. Mitesh is with us to tell us what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, hi, good afternoon. What do you have?
Yeah, Prashant. So it's been a market which has been slightly on the weaker side, and we've been trading with long bias. So now looking at possibly stocks where you can take some STVT positions in case the market opens negative, while it will not be aggressive. But the idea is to have the trading portfolio slightly biased towards some kind of exposure on the short side as well. So STVT on LIC Housing Finance with a stop at 455 and a target of 442, and a BTST on M&M with a stop at 1537 for targets of 1570.
Okay, all right, got that. Thanks very much, Mitesh, for the calls. You have a good evening. We'll catch up with you tomorrow. Well, as we take a break now, let's get you all the important excerpts from our Diwali special conversation. Prashant, of course, was earlier speaking with Ramdev Agrawal, Group Chairman and co-founder of Motilal Oswal Financial Services, as well as Manish Tukhani, Director of Enam Holdings. Listen in to that chat.
Somebody said if Modi doesn't come, then market will fall by 25%. Okay.
I think it was Chris Wood. Or
just who said. What I'm saying is that probability is 1%. What happens if he comes? That is 99%. So then market goes up by 25%. So you are losing how much? 24.5%. So the payoff metrics is more like 25% up rather than 25% down. So there are a lot of ways of the mind is very difficult to figure out the probabilities of the events. So the probability of the continuity going away is very low. At least the way things look right now. So I think, but then event is event. Let the event be over. On 7th December, one event will be over. And then I think the rally could start immediately after 7th December election.
Because depending on the outcome or irrespective?
Irrespective.
Irrespective.
I mean, if it is very bad outcome, then market may correct a little bit and then the rally will start.
You think we will have a rally into general elections?
Yes. Because this is what happened in October 2014.
Okay.
I mean, the moment in Goa, Mr. Modi was nominated as the Prime Minister candidate, I think the market actually rallied before the election. After that,
it started in October 2014 to 13.
13, yeah. October 13 to 14.
Yeah.
So that is the kind of a timeline we have this time.
Okay.
I don't know what the market does, but my sense is that depending on the result and the mood, we could rally. It is a financialization part, but the intermediaries, they are driven by digital business model because you cannot handle millions of guys physically. Okay, so it's all through the digital platforms. So whether you see the broking platforms, I mean, I remember in 87 when we started, 200 crores was the daily turnover. And there were 500 brokers, and that settlement used to be painful on T+15. And actually the settlement used to happen in T+21. Okay, so that was the kind of thing. And now you're talking about T+1 and probably 0. T+1. And what is the turnover today? It is 250 lakh crores per day. I have not seen any industry which has expanded 1 lakh time in 30 years. Now the run rate is 3 million per month. You can do your numbers. We are headed to become 500 million demat accounts in next 10 to 12 years. Any business which is digitally empowered, digitally powered, has exponential growth opportunity. See, once your business model is set, and here these delivery companies, if there is one country where delivery must happen, it is India. In $50, in dead of the night, you can get a hot food delivered. I mean, they've not made money. They're just going to start making money. And mind you, they don't have any balance sheet. It's only P&L.
Right.
So everything is written off. So your ROIs are going to be like 50, 60, 100%. So once you have, see, in valuation, I mean, unfortunately, we do too much of these tables and all. So when you have a high ROE and high growth, see, the P multiples are not going to be 20, 30, 40. You're talking about 100, 150, 200.
The amount of money which is going to go into financials is just so staggering that whether now it's a bank, whether it's a capital market player, whether it's a stock exchange, which you've seen what's been going on with BSE, MCX, and just watch what happens when NSE lists over here. So there is so much plethora of options over here that you pick. Like I gave you a menu, you think public sector banks, are they going to repeat mistakes which they made 10 years ago? I don't think so. With credit bureaus coming, with the people making 17, 18% ROIs, they can't be trading at half-time book.
Okay. Top bets, just to close that
Just take financials.
Welcome back. Here with us on Closing Bell. Well, down to the last couple of minutes, 10 minutes to be precise. Nifty is still down about 0.25%. It's been all about mid-caps once again. Today we have Amrish Baliga joining us into the last leg to take it home. Amrish, good afternoon. Season's greetings to you. So tell us, I think the market's completely in festive mode, only reacting to the numbers where, you know, big outlier, something is happening. But give us some sense. A lot of mid-cap earnings have come in the last 48 hours. What stood out for you?
No, I think, numbers more or less, if you're talking about the whole season, I think the numbers were slightly better than what people were expecting. So that's clearly positive. And then, we had a feel that possibly the oil could go to $95-100. Instead, it has corrected. I think that's another big positive. And there was also positive from the Fed as far as the rate hikes are concerned. So I think all these have in fact helped the markets move up. But then at the same time, we are seeing a decent amount of resistance at these levels. So I'm not very sure whether the markets can really move up more from here. In fact, at this point of time, looking at the assembly elections on the way, I think we could have a decent amount of volatility in the markets, and possibly we could again try and seek those lower levels which we had seen in the last 2 to 3 weeks, which again I think will give a very decent buying opportunity at those lower levels.
Okay, all right, Amrish, if you're expecting volatility, then that opportunity as well comes about, right? So what's the one stock that you've picked for us?
In fact, I'm looking at Bharat Forge, which is one of the leading auto component exporters, whose expertise is in forging and metallurgy. The customer sectors which they cater to is passenger vehicles, commercial vehicles, oil and gas, construction and mining, power and defense. And nearly 47% of the revenue comes from industrials. And for the defense sectors, they make artillery systems, protected armored vehicles. In aerospace, they're making jet engine components, sub-assemblies and structural items. So expecting an exponential growth in these two verticals over the next at least foreseeable 4 to 5 years. If you look at the earnings for Q2, EBITDA was in line, but the net profit was a bit lower than expectations. So because of which we have seen some correction, and I think that's a buying opportunity. If you look at the export business, that's grown by about 21%. Defense orders continue to flow. Aerospace order book position extremely strong. They had taken over JS Autocast last year, and that segment has in fact grown about 28% Y-on-Y. So overall, I'm expecting a revenue CAGR of about 18% over the next 3 years. With that, expected EPS for FY25 is about 40, and my target price is about 1280, which is a decent 20% plus from here.
Okay, got that. So Bharat Forge, it is. Yeah, I remember speaking to Mr. Kalyani earlier in the week on this show itself. He was sounding as optimistic as ever. Just going back to some of the major result highlights today. By the way, MTAR is down 11% now. Amrish, I don't know if you had a chance to look at this, company. I remember the stock was flying around, especially around that Chandrayaan time, because obviously MTAR does a fair amount of work for the nuclear sector, for aerospace and defense as well, even space sciences, and that's when it rallied and how. But it seems that now they have some issues. Some of the revenues are getting deferred to next year. Any thoughts? Is this a dip to buy, or is it the time to stay away?
I think, quite a few of these stocks have moved up basically because of their defense tag, and we have seen some of them actually become multi-baggers. So I think the disappointments out there could be higher than, something like a Bharat Forge, which has been a defense stock for quite a while, and has been you are performing consistently. So these new age stocks where they were the defense tag, I think one has to be a bit careful, especially the stocks which have become multi-baggers, because possibly, whenever there's a disappointment like what we have seen now, the cuts could be sharp. But again, something like a MTAR, I would be comfortable buying it more towards those levels of about 1,600, 1,700 than the current levels.
By the way, I'm looking at Newland Laboratories right now. Newland is up about 6%. The stock is put on 35%. It's a rocket for sure. It's a Diwali pataka, and this is after earnings. Numbers were good. Ekta was telling us margins expanded as well, and the markets just lapped it up completely. So, Amrish, any thoughts? I don't know if you look at Newland, but anything else that stood out for you in terms of mid-cap pharma? We've had a string of good earnings here as well.
Right. Newland, in fact, I don't track it very closely, but one of the stocks which I've been tracking for a long time and I've been bullish, slightly, larger among the pharma, Lupin. where I think the results were decent. And in fact, I see that stock still moving up further from here. In fact, I had a target of about 1300 earlier, and now I would possibly up it to about 1425, 1450.
Okay, all right. Amrish, what about Ramco Cements? Did you have a look at those numbers? They just came a couple of hours or so ago, and the numbers look very, very good. I think the only problem is valuations. Trades at roughly around $140, $150 per ton. But these numbers look very, very good. It should be the result of the cement sector. Your take?
I think, this is a time, not about only Ramco, but I think cement sector overall. What we have seen in the last, 2 to 3 years, post-COVID, is that we had seen the volumes had gone up, but the profitability or the margins had not gone up because of the cost pressure which was there. But since the last, 1 quarter and even going ahead, I clearly see that cost pressure coming down. We've already seen that in the earnings which we saw from most of the cement companies, this quarter. And I think going ahead, the margins will expand. Volumes are anyway moving up. So I think over the next at least 1 to 2 years, you will see most of the cement companies doing extremely well. And here again, my pick would be Ambuja and ACC as well as Ultratech.
Okay, all right. So some cement ideas there as well. Amrish, we'll leave it on that note for this afternoon. Thank you very much for joining in. And once again, in case we don't catch you before Diwali, wish you a very, very happy and joyous festive season. Have a fantastic Diwali. Thank you very much. Well, with that, it's time to start wrapping things up. And as we're doing that, it's a very range-bound day. By the way, today the range on the Nifty between the low and the high, it's not even been a full 100 points. It's been that close of a choppy market, but in an extremely narrow band. The Nifty is ending at exactly that pivot of 19,400. That's where we are at. And the culprits are some of the big boys. The blue chip counters didn't quite add up today. So we've got Lever there with a cut of about 1.5%. Infosys TCS from the tech stable. Reliance was dragging right from the morning. That did not change. ITC. And some of the big banks like HDFC as well. So basically the big boys were, taking a break and they decided not to get counted on the upside. However, what did work was auto, and M&M is really revved up ahead of its numbers. 4%, 4.5% right now. It's approaching those numbers at a high. So let's see. We'll find out how they are tomorrow. And it had company in the form of Hero Moto, Tata Motors, Maruti. So the auto space looked pretty good. And then, Nigel, of course, there's Apollo Hospitals. Fantastic show there. And the stock's almost 4% higher going into the close.
Indeed, Sarbi. And there were a few big movers today. And some of those stocks that have done very, very well. MCX, where it pulled back close to 6% in today's trading session. Deepak Nitrite as well was down close to 3%. And Tata Power, we had the management earlier today. That stock went home with a cut of close to around 3% in today's trading session. But talking about big movers, well, Genius Power in the closing minutes, I think we have those numbers that have come up for us on the screen. In fact, it appears the net profit is around 50 crores. That compares with around 6 crores. So that's why Genius Power in the last few minutes has seen a bit of a spike up today. The numbers were due and they've just hit the screen as we speak. So big move out there. AU Small Finance Bank as well did pretty well. That one was up close to around 2.5% in today's trade. What else? Everready, well, that was a mild mover. It was up close to around 2%. On the losing end, you had Precall as well. That was down close to around 8% in trade today. So some selling out there. And Amy Organics, well, that stock was down close to 6%. I think from the recent high, that stock has corrected more than 20%. Amy Organics, a lot of hope out there that, they will be touching a couple of important points with regard to this, entire EV theme that is likely to play out. But for the time being, the street didn't like the numbers that came in overnight. And that explains why the stock was low. Even SKF actually was down close to around 7% in trade. Numbers came overnight. So both those two on the losing end, guys.
A thanda kind of session, right? Very much.
Tomorrow the real thanda you get.
But it is Friday night. So we'll
Friday,
bear.
Tomorrow.
We'll grin bear. So yeah, it's not very much to really write home about today. But the markets bounce nicely and you'll have days like these as well. So around 19,400 is where we are finally leaving off, which is, by the way, around the 20-day moving average. I think almost we'll be about 5 or 6 points away from the 20-day moving average by close today. So for 3 days now, the Nifty is kind of closed around that average short-term moving average. Nifty bank ends just marginally higher, but really nothing. 27 points on an index which is now close to 44,000. I was saying in the morning that so small cap index, by the way, which is the strongest of the lot, made a new high, closed at a new high yesterday. But volumes in the broader market have been lacking. There's been no expansion in volumes, which is not a great thing. You want markets prices to move, but volumes also to show up, which was not the case. So watch this, when we get the late data today. But that's something to track. 40 points lower on the Nifty. We are ending at about 19,400. It's a wrap on this edition of Closing Bell, but don't go anywhere. Our Thursday special big deal comes right up.